Good weekend all. Ira Epstein with your metals market wrap-up, and this is your weekend edition for this Friday, April 17th, 2020. Well, this was an ugly week for gold traders and metal traders, period. Except for in copper. Copper came alive this week and really did well as factories have reopened in China. They're questioning, though, on those factories without the demand from the West, how long they can keep all the lines running. So some of them are going to pull back a little bit from the things I'm reading. And of course, we're hearing the phases that the president said that the U.S. economy is going to open in, and that as many as 29 states could be open by early May. I don't know, we'll find out, but the stock market, like everything it heard, ended up on a bang, and what it became on today was a risk-on day. So people were buying the stocks, they sold the dollar, they dumped their metal positions, they dumped the bonds, the notes, as you can see. So that's where you're at on that today. But each day is a new life in this market. Let's take a look at what we're going to start with, and it's a monthly chart of gold. On the weekend edition, I'm going to give you first a monthly and then every other chart's weekly, because on Fridays we're looking for the bigger picture. We know that during the week you're getting all that volatility, but when you look at a weekly chart, changes things a little bit. So we have a pattern that was here of a lower low, and now we have a higher high. The market had gotten over the upper Bollinger Band. What are the odds of staying over a Bollinger Band? The odds of staying over a Bollinger Band are 5% of the time. What the market did is it broke back after it got up to it and settled about $4 under it. It didn't do any damage to the market, but we're also, while in a thrust move, we're not putting together a pattern of higher lows and higher highs. Support on the pullback, probably in between these two numbers, but that's a big break. So I have my doubts that you're going to be able to get back there. Strong doubts about it. I wouldn't be surprised to chop around a little more, but we're seeing the Bollinger Band is stopping this market from running. And unfortunately, I don't know if we're going to get another piece of news for gold that just kicks it and gets it going, other than deflation, other than economic news, which is just absolutely terrible. In other words, we might be at the point where gold stops looking at COVID-19 and starts looking more at economic news. Just a warning, but it could be at that point. On the weekly area chart of closes, we went straight from 1484.80, or that 60, up to this high on a close, 1736.20, and we've just given up roughly $50. You didn't do any real damage. The market still has upside bias. This number now makes more sense to me than looking on the other chart on the monthly. This looks to me the 1585. Not saying you have to go that low, but I'm saying it looks like a more formidable number the market would be able to support. When we look at a weekly bar chart, we see how we went up, pulled back, and when I put on the swing line, you get the pattern of higher lows, higher highs. That's bullish. We put on the moving average, this 1585.40, and that number is going to jump when we open up on Monday, and we're over the last break low. So now I have another number that I can live with. That 1585.40 looks even better because you wouldn't take out necessarily, if it held, the 1570 level, and this number has been jumping each week, and I'm just giving you about $10 a week. Now, certainly, until the week is over, you'll see where that number is each day, but until next Friday, you really don't know where it's going to be. What about the resistance level? Right here, that upper Bollinger Band, and you got thrown back. So we're getting a pretty good picture here that the upper Bollinger Band, while you get over it, the market immediately gives up ground on it. Okay, I can live with that. At least I understand it. Momentum-wise, when I look at the slow stochastic, when I look at the oscillator of momentum, I look to see, is the market on a weekly chart, number one pointing up, number two pointing down, number three going sideways. This is a chart that had been pointing up and it started to stall this week, and that fits in with the price a bit. The gold-silver ratio. On the longer-term chart, it still favors the gold. You'd have to get under 96.20 to say that it settles in favor of the silver. That's the demarcation point. Remember, these numbers on the side are how many ounces of silver in a perfect world you'd have in your shopping cart. You roll it into the door, there's no commission, and the person would say, gee, no commission, I'm giving you exactly what the spot is, and you'd need 110.41 ounces to get 1 ounce of gold. When you look at the silver chart on itself, unlike gold, it never did get up and over the 18-week average of closes. So the market's kept, and that's how I define bias. If the market's under that number, the bias is down. The swing line can be and has been pointing up, but it's countered by that bias. And where the market is paying attention is the 100-week average in the green. That's been the resistance point, and the market so far has been unable to stay there. Momentum-wise, the market's still trying to point up a bit here. It flattened a bit this week, but it's certainly not pointing down. In the copper market, as much as we hear, oh, the copper's looking good and it's going to rally, you're still well under this 18-week average. You still have a pattern of lower highs, lower lows. This monster break is what the market has been correcting. It has some divergence. You've got momentum pointing up. See the red line, how it's coming up. But the further you run, the stronger the resistance is going to be at that 18-week average. And I'm not saying it can't be hit, but it's 20 cents away. That's pretty far away. You'd have to get another 9% move roughly in the market to get up there. In the palladium market, here too, you got down very cheap, and the market came out of its downtrend. When did it come out of the downtrend? I want you to look at this pattern. This is the week, not here. You still weren't over 756.20. This week you did. So it turned the swing line up. I'm looking for formidable resistance up in that area, the 100-week average to the 18. I have divergence though. I've got, remember, the swing line up, the bias down, momentum up, not a trend trade. In the dollar index, the dollar said, I've got too high when I got over the 101 level. Couldn't hold over the upper Bollinger Band. Now, the odds of it holding there, 5% of the time. One of the things that I'm sure when it's there, I was saying, this market, be careful, folks. 5% of the time you stay over it. And now, what has the market done? Well, it's still in an uptrend because you have higher lows and a higher high. Or do you? I could argue right now, I have lower highs and higher lows. Therefore, the market's doing this. It's starting to work in something of an apex. Now, admittedly, the apex is going to be on a V like that. I like when they're more drawn out, but that's what the market seems to be doing. Momentum is drifting to the downside. Any move under 98, I believe that's 98. Let me just give you the number here. 98.39 would be the number. Breaks the uptrend, or what had been an uptrend, and any close under 98.40 starts what? A downtrend in this market. So that's what I'm looking at. How is the market going to handle, if it gets to that number, the support for that for the week? That's the end of that. By the way, in case you didn't know that, one of the things I do is this is how my news comes in on my charts, because you're looking at the charts that I set up for this particular show. Now, I want to remind you, I start you off each morning. I do 2 subscriber videos. These are not subscriber videos. These are my freebies. They're for people on YouTube, our website. But my paid subscribers get 2 types of videos. This is what I call, right now, a freebie. But in my paid ones, I start first for the futures market people. At about 5:40 in the morning, I record a video covering 40 futures charts. It's all the sectors, the financial, the metal markets, interest rates, currencies. I go right on through the spectrum. But I've already been up quite a while, and I've read what's going on in Asia. I've read what's going on in Europe. I know the reports coming out in the U.S., and I'm going to review them with you at that report and tell you what the markets are looking for. The idea is to get your day going, and this is the sequence that I cover it in. Each video is about 20 minutes long. I'm not in them, thank God, that early in the morning. And my screens will look this way. They're going to be jet black with more studies. The idea is to give you confidence as to what trades look like. Confidence does not mean you have to follow a thing I do. But if you're looking at me and you're watching this show on a regular basis, wouldn't you want to see what I'm telling the people, buy here, sell there? I'm going to be wrong. It's a guarantee I'm going to be wrong. I'll have winners. Done this long enough to know that too. For $7.95, it's worth a try. And I do the same thing in a Spider ETF video that I put out in the afternoon on Monday through Thursday. Today's Friday. It comes out a little later just because the markets, I can afford the weekend to play with it. It's already out, though, at this hour now. So all you do is go to our website. Under the word research, take a look. That's what keeps these shows going. And I think you'll find as we're all locked into our home, it's something to look at. And I think that you'll find yourself fairly hooked on it right away. I'm Ira. You have a great weekend. I will see you all come Monday.